Let's see if CVS is a play from a value perspective. And for my traders, stick around to the end and we're going to cover that as well. So CVS just reported earnings pretty recently. Looking at this, I mean, it really comes down to two major companies. It's CVS and it's Walgreens. But the interesting thing is that you have Cuban Pharmacy coming into the mix. You have the Amazon Pharmacy coming into the mix. But also you have these CVS and Walgreens types that are starting to get into what they're calling these health hubs. So let's see what they did this past quarter. Going forward, what's going to happen, and let's go. Market cap of $134 billion. Now, just looking at this, before I pull up the press release from the second quarter, a couple things stand out to me. The first thing that stands out to me is the shares outstanding number, 27.4% increase. Now, to me, I'm thinking to myself instantly, okay, there has to be some type of acquisition going on here. The debt situation, long-term liabilities, I should say, it's not the worst, not the best. I would like to check out other companies in the industry if I were to do more of a deep dive into this, because if I remember correctly, I think that Walgreens has a similar debt scenario as far as that number goes, but I'm not exactly sure. We'll check it out here in a second. Return on invested capital, it is a worrisome number. It's pretty low, especially for a company that does what they do. But let's go to the second quarter and see what they did. Their revenues increased. I mean, it was actually an incredible increase. For a company like this, I was thinking that because you have the pandemic kind of moving out, I thought that we would kind of see a shrinking in a company like CVS, but we didn't see that. Total revenues increased $80.6 billion, up 11% compared to the year prior, which is absolutely incredible. And I highlighted this here. I typed this in myself. I put in health hubs because I don't want to forget about that looking forward. And maybe when we get to the price that we're going to pay for this, maybe including that in the back of our minds. Total revenues, I mean, you see the increase. 80.63 billion up from 72.6 in 2021. I like seeing this because I was concerned about that debt. They repaid $1.5 billion in long-term debt. In this document, they've mentioned it a couple times that they've done that. A couple more things that I've highlighted. They enrolled 6 million active users in the company's individualized healthcare or health dashboard since the launch of it earlier this year. That's a big number. This is where these pharmacy companies are going to need to start to compete. So instead of you going to an emergency room, instead of you going to see your primary care physician, maybe you can go to a CVS. They're going to build them out and they're going to have these kind of primary care visits. I'm not sure if they'll get to the level of emergency rooms though. Net income did very well. Net income, if you have it the 3 months ending in 2021 and 2022, they had an increase, and going to the 6 months ending this past quarter, increase there as well. So everything seems to be looking pretty good for this company. Now let's go down. So their healthcare benefits segment, another increase there. Pharmacy segment, increase there. And this is the part that I thought was going to drop. I thought that this was going to be drop or at least be neutral because the COVID stuff has kind of slowed down. And that is where I thought that we were going to see the fall. But we have not seen that fall. Total revenues increased 11.7%, like we said earlier. Total pharmacy claims processed increased 3.9% on a 30-day equivalent basis. Now, the part I highlighted in blue, the increase was primarily driven by net new business, cold, flu, etc. And if you take out the COVID part, they did have an increase of 5.7% on a 30-day equivalent basis. So that alone is telling me, okay, this company is doing something right, because even without having to stand on the influx of business from COVID, they're still doing very, very well. The retail segment, of course, this is important. They have tons of stores. They are growing in revenue in that aspect, so people are shopping there. They have a lot of different products in CVS, as everybody knows. And going into full year guidance, they raised guidance. They expect their cash flows to increase. Their new number is 12.5% to 12.3, up from 12 to 13 billion. One thing that I really wanted to look at, of course, in the retail space was same store sales, and you have here. This is 2022, comparing the 3 months end and the 6 months end. So those are our categories. So same store sales, 8%. I don't like seeing that compared to 2021. This is 21, this is 22, 3 months ending. This is 6 months ending, however. So they were increasing their total same store sales. You see pharmacy fell a little bit. Storefronts fell a little bit. Prescription volume fell drastically. But I think as you start getting that competition coming from those new pharmacies, those people that can deliver cheaper drugs and much more efficiently and much obviously more quickly, that is when you're going to start to see a little bit of a concern. And how are these companies, it's not so much a concern, how are these companies going to adapt to that situation? So let's go back to the software. So going back here, I want to look at these shares outstanding and see exactly what was going on here. Let's go to the income statement. Let's run to the bottom. Shares outstanding. So they started really increasing from 2018 to 2019. So that tells me, was there some type of acquisition that happened in 2018, 2019? And there was. $41 billion. Go find out what that was. I'm not really sure what that was, and I can't think of it off the top of my head. But that is something that is telling me, okay, that's where those shares came from. So that number is not immediately alarming. And I want to go back one more time. And since that time, we're consistent. So 1.3 billion, that's when you had the increase, 1.31, 1.31, 1.31. So they're not increasing shares. That did come from some type of acquisition. I would like to look at their debt. Total current assets of $61.5 billion. Total current liabilities of $69.7 billion. Now, I'm going to do something different real quick. I want to go to Walgreens real quick, just because I want a comparison. Let's look at the balance sheet. Total current assets, $18.9 billion. Total current liabilities, $24.07 billion. So this could be some type of thing that you consistently see in this industry of the pharmacy space. So let's go to the stock analyzer tool. What do I want to pay for this company? Guys, when I put these numbers in, I'm going to stress this thing. I have started to look at these stock analyzer tools from the point of saying, okay, when I go to my low end, I am going to put in low, almost unrealistic numbers, because the middle ground could be the middle ground and the high end could be something that I hope is going to happen. I think is going to happen, but it's a stretch. But I really want to stress this thing. So if I do put low numbers in here, don't think that I'm crazy right off the rip. This is just my starting point. I'm going to go further from here. So revenue growth. They've been consistent with revenue growth about 10% over the past 10 years. Let's go in there and let's put 5, 7, and 9 in there. And again, remember, I'm stressing this thing. Very consistent profit margin that we're seeing in there. So let's put 2.5, 3, and 3.5%. Maybe they can increase that. Actually, you know what? Let's go 2.0, 2.5, and 3. 2.5 and 3. And free cash flow margin, let's go with 4.5, 5, and 5.5. PE ratio. So it is interesting. They're in a very interesting space. They're one of the few that actually have the brick and mortar stores that are doing it pretty well. So let's give them a little bit higher PE, 14, 16, and 18. And for price to free cash flow, I'm going to go a little bit lower. I'm going to go 10, 12, and 14. And because I don't think this is the most risky investment in the world, I'm going to go with 12.5% return all the way across the board. That gives me more than the S&P if I were to just invest in an ETF and let it go. And here we go. Let's see what these numbers spit out. So the current stock price is at $102.50. My range right here, it's pretty vast. And remember, we change those numbers for the free cash flow. So I'm probably going to be starting to look at this thing somewhere in the $80 range, $75 range, somewhere in there. Yeah, I think I'm going to start looking at this thing somewhere in this probably $75 to $80 range. And this kind of goes in line with if you're going to compare it to Walgreens, Walgreens is kind of in the buy range if I were to do stock analyzer tool. So this is when you choose. I think they're both great companies. I think they're both companies that you could look at. But if I had to choose, that's where it comes in. For me, I wouldn't want to own both because they're kind of in that same sector, same area. But for you, go and do your research. Decide if you want to own both. Decide if you want to own one. Decide if you want to own none. Now, for you traders, let's look at CVS. CVS has had a very interesting run over the past several months. I mean, if you look back here, going back to March, this has been an incredible fall and a pretty resilient rise back to where we're at. Now we've had earnings, we're gapping around a little bit. So as you guys know, I don't love making the trade on earnings day. But for me, how would I look at this? I'm going to blow up the long-term chart and I'm going to zoom in. And the first thing that I notice is that we have a gap that was created on the earnings date. So for me, wicks are being created. I'm just going to let this thing chill out. Let's let this thing chill out. Today is actually Thursday, so I'll probably wait until Monday and see what happens here. Let it just consolidate sideways. See where the stochastic goes, because we do have red and yellow in the sweet spot. If this climb continues, great. If it decides to roll over like this and come back down, well, you have a great short and you are able to fill that little gap that came about. Let's also look at it from a swing trading perspective. because I think this is the best way that you can capitalize on this stock if it stays above these major moving averages. You've had a long road here. It's very hard to trade a stock that is just stuck between all these major moving averages. Now that we're above it, maybe we could start making some climb above it. If the market falls apart, this thing is going to come well below all 4 major moving averages and move down on you. So that's CVS from both perspectives. Catch you on the flippity flop.